Very good morning, friends. I'm Nalnakshi Swami, welcoming to my channel Smart Index Edge. As mentioned in my previous day morning video, the market has shown the same pattern of Nifty trending down. You can see on previous week, that is on Thursday, market ended down, closing near the low. Even this week, the market Thursday expiry was closing near the low. But the difference in this is it had broken below the uh, Monday's low, Monday and Friday low, closed near the bottom of the low. But here, market has closed within the range of Friday and Monday. It has closed. Thursday has closed. So, and this is an indicator which I have made for recognizing the, monthly high and monthly low, so that I will get to know what is happening from the beginning of the month. Week on week, this is the blue color line, is the average line. Average line, and which runs through the week on week. So these are the lines acting as resistance. And for the present week, the average line is placed around 25,182. This is the line which is marked, and it has been calculated as 25,182, and this will be reference point for our trade. If I go back and see this is the weekly Friday and Monday, that was on 20th June and 23rd June. So the average reference line comes around 24,980. And if you go back, the average line comes here. The June low, the month started, previous month high and low is 24,526 to 24,717, and the market rallied up to July. And from July, week on week, the market is correcting, and it is near the June 20th, 23rd, I believe. This is 20th June and it is 23rd June level. That is the average weekly level we need to carefully watch. And the structure is, you can see the market went high, presented in the same way, but on Thursday it was a huge breakdown on the previous week. But it has contained within the weekly range, that is Monday and Friday's range, closed within the range. We need to see how the market will move on Friday, whether it is going to break down this low, or this low will act as a support for the market today. So important level to watch is 24,998. The price action is suggesting it's a trend down, and it is a pullback. Pullback and correction again. Correction has resumed in the market yesterday, Thursday expiry, closing below the previous day low. Previous day low, that is on Wednesday low. It has closed below the Wednesday low, and VIX is 11.24. Based on the India VIX, daily high to be 25,259, the calculations, and daily low to be 24,963, and we need to closely watch this level. This is the average line on the June month. So if the market comes down and tests this level, 24,980 to 24,963, then the market can do like this. In the opening bell, if it runs like this, it can halt over here and it can reverse, or it can continue its down move and it may go down also. It may continue its down move, and the next level is weekly level is placed around 24,728 is also the average line of the June 13th, Friday, June 13th, and Friday 16th average line. So now the June 20th and 23rd average line is around 24,980. So you need to see the price action, whether it is going to break this Monday low. That is very, very important. Closing of Friday, this Friday is very important. Whether the market is going to halt here, the price action, and a reversal will start in the market. We need to see the market, how it behaves. But the trend it has presented is down, but within the range of previous week, Monday's low. Coming to the Bank Nifty also the same. It has closed within the Monday's low. Within the range, it extended beyond the Friday's high, and there was a double top and market could not go there, and it was a huge down move and closing below the average. The average line is placed around 56,872, and the Monday low is 56,596, and the first support comes around 56,494, and the first resistance is 57,519 for the current week. The average line is placed very far below in the Bank Nifty. We need to see whether the market may trade within this range. For today, it may trade. This is Monday's low and this is Friday's high. That is the weekly range. It is within the weekly range. We need to see whether it is going to break the Monday low. This is the low made on the, you can say it is a weekly low and weekly high. And market moved higher than that, and it is closing within the range, and average line is placed around 56,872. The concept of average line, reference line, I have made in the video, weekly balance line. Please go and see that. I will attach this on the cards, the link you will get, and you can watch it too. That is very, very important reference point. So since why I considered the weekly balance line is the market balanced through week on week. There are 4 weeks in the market. So when we closely observe the Nifty, week on week, it is closing below the balance line. Even on the previous week, it closed below, far away from the balance line, exactly near the low of the Friday. Here, it has closed within this range this week. The selling was not very aggressive when compared to the previous week. You can see the selling over here. That was on here. It was a down move. It was a down move, but within the boundary. Same, holding the boundary of the weekly Friday's low. Here, the price action you can see, the market is, the correction in the market is not so severe when compared to these two previous weeks, and it has closed within the range. Suppose if there is any trap below this low, because the people who have gone long, their stop losses will be there, or put writers will be there below this line, and that is 25,001. So there will be liquidity beneath this. So if the market grabs this liquidity and makes the daily low of 24,963 to 24,920, it will respect this balance line, and it may show some sort of reversal. Today's close is very important. If it tips down and closing within the range, can trigger reversal in it may halt the 3 days correction, and some sort of respite can come in the market in the coming week. That is a possibility, that is the expectation. But market will not listen to our analysis, but we can anticipate that. By anticipating these things, you should never participate. You should act on what the market presents at the current day, and you need to watch the current day price action, and you need to trade accordingly. So you will be having anticipations, but participations will be based on the current day price action. Thank you very much, friends. Naranakshi Swami signing off, and I wish you all happy and profitable trading day.